Did you know that up to 95% of crypto traders lose money? It's a staggering statistic that surprises most newcomers, but it's the truth that rarely gets talked about. While the headlines are filled with stories of people striking it rich overnight, the vast majority of traders quietly watch their investments shrink, often losing more than they ever expected. The dream of overnight riches is everywhere, plastered across social media feeds and YouTube thumbnails. It's easy to get swept up in the hype, believing that anyone can turn a small investment into a fortune. But the reality is, most people end up in the red, chasing quick wins that rarely materialize. For every flashy success story you see online, there are thousands of untold failures, people who lost their savings, their confidence, and sometimes even their hope. These stories don't go viral, but they're far more common than you think. The crypto market is volatile, unregulated, and ruthless. Prices can swing wildly in minutes, wiping out gains and leaving traders scrambling. There are no guarantees, and the risks are higher than most people realize. Without a solid strategy, you're not investing, you're gambling. Many jump in without understanding the risks, treating crypto like a lottery ticket instead of a financial tool. This mindset leads to reckless decisions and, more often than not, painful losses. If you're tired of losing or just starting out, this video is for you. We're here to pull back the curtain and show you what really happens behind the scenes, so you can avoid the common traps that catch most beginners. We'll break down the top 5 reasons most traders fail, and how you can avoid their mistakes. By understanding these pitfalls, you'll be better prepared to navigate the crypto world safely and smartly. Let's get started. What's the single biggest mistake new crypto investors make? It's jumping in head first, buying coins or tokens with zero research or understanding. Too often people get swept up by hype, a trending tweet, or a friend's hot tip. They buy based on FOMO, not facts, without knowing what the project actually does, who's behind it, or even the basics like how many coins exist and what gives them value. Don't just glance at the price chart or follow the crowd. Take the time to read the white paper, understand the project's goals, and check out the team's experience and reputation. Ask yourself, does this coin or token actually solve a real-world problem, or is it just riding a wave of speculation? If you don't know what you're buying, you're not investing. You're just gambling with your hard-earned money, hoping for luck instead of making informed choices. So before you invest a single dollar, spend real time investigating. Read, compare, and question everything. Doing your homework isn't just smart, it's the first step to separating yourself from the herd and making decisions you can stand by, no matter which way the market moves. Emotions destroy more traders than any market crash ever could. The ups and downs of trading can feel like a wild ride. One moment you're on top of the world, the next you're questioning every decision you've made. It's not just about numbers on a screen, it's about the psychological battle raging inside every trader. When markets tumble, fear and anxiety can take over, clouding your judgment and making it hard to think clearly. Even seasoned investors aren't immune to these emotional swings. Greed makes you chase pumps and hold too long, convincing you that the rally will never end. It whispers that you're missing out, pushing you to take bigger risks than you should. Fear, on the other hand, makes you panic sell at the worst moment, often right before the market recovers. It can paralyze you or force you into rash decisions. FOMO, fear of missing out, leads you to buy tops, jumping in just as the excitement peaks and prices are unsustainably high. And panic leads you to sell bottoms, locking in losses and missing out on the eventual recovery. These emotional reactions can be devastating to your portfolio. The solution? Have a plan before you trade. Set your entry, profit targets, and stop losses. This structure keeps you grounded when emotions run high. Write it down and stick to it, no matter what the market does. A written plan is your anchor in the storm, reminding you of your strategy when chaos hits. Discipline beats emotion every time. The most successful traders aren't the ones who never feel fear or greed. They're the ones who follow their plan despite those feelings. Your plan is your shield. In the unpredictable world of trading, it's the one thing you can always rely on. Leverage looks like a shortcut to riches, but it's really a trap. Trading with borrowed money means tiny price moves can wipe out your entire account in seconds. High leverage is for pros with strict risk management, not beginners. Most people lose everything chasing big wins. If you're tempted, remember, a 1% move against you at 100x leverage means total liquidation. Stick to spot trading and protect your capital. There are no shortcuts. Social media hype is a minefield. Influencers and celebrities often pump coins for their own gain, leaving followers holding the bag. If a coin is trending, ask, who benefits from this hype? Don't let FOMO guide your decisions. Do your own research, always. Real value doesn't need an army of influencers. Trust fundamentals, not tweets. The final killer? No risk management. Never invest more than you can afford to lose. Ever. Use stop losses to limit your downside and position sizing to avoid catastrophic losses. Don't go all in on a single trade or coin. Diversify, set your risk per trade, and protect your capital at all costs. The best traders survive because they manage losses, not because they never lose. Without a safety net, your downfall is inevitable. So, why do most traders lose? Lack of research, emotional decisions, leverage traps, hype chasing, and no risk management. Avoid these, and you're already ahead of the crowd. Success isn't about luck or secret tricks, it's about discipline, patience, and protecting your capital. Treat trading like a business, not a lottery ticket. If you found this helpful, hit like and subscribe for more honest trading insights. Thanks for watching. See you in the next one.